All right, hello, welcome, ladies and gentlemen. It is January 14th, 2024, coming to you today. Markets had a nice intraday reversal off of some lows to finish the day strong. Got some PPI numbers this morning. Let's dive into that. We've got CPI coming tomorrow. I think it's going to be a big deal for the market. Tomorrow will give us some guidance, at least for the next several weeks, I think, coming out. And I think a lot of things are hinging on this. Bonds, markets, where are things going? If volatility is starting to increase a bit on us, so a lot of things going on out there. I am still cautious, but still bullish. Okay, so bullish, but a little cautious here. Not really putting on any bullish trades at all. We are putting on some hedge type stuff, and we're putting on some strangles and some jade lizard type trades or and 112 trades designed to take advantage of the market kind of stagnating or even dropping a bit here. I think we'll start to see this really start to pay off in our account here. I'll share with you what I'm doing. Well, let's take a look at the markets and see where we are on things here. So let me share. Let's jump in. And first thing we'll do today is let's just take a look at what happened on the economy side with the PPI numbers. And to me, these were pretty good numbers. If you're looking for maybe inflation to be easing a bit, we were looking at PPI, the month over month was 4%. Last month, it's 4% was the forecast, and we came in at 0.2%. So, the month over month core went from 2% to 0%, and then the PPI month over month actually dropped from zero point 0.4 to zero point 0.2. So overall, a pretty nice easing of potential inflation fears, at least from the producer side today. Is that going to foreshadow some things tomorrow? I don't know, but that's what we're going to be looking at because tomorrow we get the CPI numbers, certainly core CPI. We're looking to stay unchanged at 0.3%. We are also looking for the CPI year over year. They're expecting an increase from 2.7 to 2.9. Now we know the Fed is tagging 2% as their goal. So they want to see inflation at 2%. So we're definitely above that. And going from 2.7 to 2.9 would be going the wrong way. And if we take a look uh, at the chart, and maybe it's a little easier if we simply go with the line graph instead. But you can see, yeah, we were up here decently at about 9.1% back in July of 22, and we've really come down pretty good. We hit that 2.4% mark back in October, and then November ticked up to 2.6, and then December 2.7. So we've been increasing the last 2 months, which has caused the Fed to stop cutting rates. They're easing a bit. Inflation ticking up a tad, but really not ticking up, too badly. So going from 2.4 here to 2.7. The question is this going to continue? Are we on an upward move, kind of like where we were back here in 2020 as we started to move higher and then really got cranking in 2021? We really started to get moving. Or are we just going to kind of maintain and a little bit of an increase like back here in 2019 where we rolled up a tad to about 2.4% and then rolled back over. We'll see what happens, but right now we've got a little bit of an uptick in CPI, and that's not what we want to see, at least from a Fed standpoint. That being said, we are in the fear side on the fear and greed index, and we're on the precipice of the extreme fear. Do I really think that this is where we are? Yeah, I think we may not be in extreme fear, but I think there's some definite fear out there, and I think a lot of that's going to come into play with what does the market do tomorrow when the CPI numbers come out at 8:30 a.m. on the Eastern time. Do we see inflation rearing its head as expected? And does that send the market significantly lower? Knowing that the Fed's not cutting anytime soon, although if you look at the Fed Watch tool, we are not expected to see any Fed cuts until probably May of this year, and that might be the only one. A 25 basis point cut is all that's being, filtered in for this entire year of 2025. So rate cuts aren't coming to save anybody. Interest rates aren't looking to drop significantly. Is the Fed going to keep them higher for longer? the plan. That's what they've said they're going to do. And what we don't want to see is inflation, the CPI number starting to really tick up. 2.7 would not be a great number, even though that's what's expected. And then 2.8, 2.9 would be absolutely disastrous for the market. So a beat of that number, I think absolutely a complete disaster. I think that'll spiral this market down. If we come in a little lighter than expected, you can see some continuation of today's reversal rally to the upside. So don't know where we're going to go, although big rally into the close at the end today. Pretty interesting to see that. Does somebody know something out there ahead of the CPI report? So I don't know. You would think not, but based on PPI coming in lighter, could the CPI come in lighter? That might be some expectation. We'll see if there's a big shock to the upside. I think we are in big trouble on the markets. So that being said, let's take a look and see where the markets were today overall. So let's take at the E-minis here. So if we look at the S&P, the E-minis, I know there's a lot of lines on here. I apologize, but I'm doing a lot of work just trying to figure out where things are going and using whatever tools are at my disposal. If we really focus on the weekly chart, still higher highs, higher lows, higher highs, higher lows, higher highs, still a higher low in here. And we would have to break this, 57.18 level or so in here to really set a lower low from here, and then we'll see what happens. So we would be breaking this higher low in here. But right now we have a little bit of a downtrend ongoing. We're in this downtrend channel. We touched the bottom of the channel yesterday as we broke the Bollinger Band and then popped right back up in today. We were higher, we were lower, and we kind of finished unchanged. So a little bit of a hammer candle yesterday and a bit of a doji candle today. A lot of indecision, I think, ahead of the CPI numbers tomorrow, and see where things go tomorrow. I think that'll be certainly interesting to watch. We're just going to hang in there. Made a little bit of a bet using a butterfly today. Might add another one tomorrow to the downside. But we took advantage of the end of day rally to book about a 77% winner in, I don't know, 20 minutes or so. But we were going to leave that thing on for tomorrow, kind of playing with house money. If it comes in a little lighter, which is very possible based on PPI, we'll take a nice trade winner to the upside. And if we go down, we'll be all good. That should allow hedges to kick in tomorrow. So we'll see, but it's a defined risk bet. Anyway, S&P, though, down to the bottom of this channel, holding the support level a bit in here. Yeah, we did break it, touch the trend line, but we've really been holding this previous low in here. So this 56.86 number has become a bit of a line in the sand that I think if it breaks and we close below it, then, maybe some more downside. Even if we move to the upside here, I could potentially see a rally up to this trend line and then us rolling back over a bit here. I don't have a whole lot of bullish conviction. I would like to see the markets give back a decent amount here so that we can get even longer on things that we have. All right, so there's ES. Let's jump into oil on the day. Nice pullback on oil on the session. Yesterday we had broken the Bollinger Band and the 3 ATR, hitting a previous pivot high level, reversed off of that today. We'll see if we get any more follow through to the downside. I do have some naked calls on oil, and you've got RSI overbought and dipping down. You've got stochastic momentum overbought as well, and potentially now MACD rolling over. We've had a pretty good run on oil. We got a couple spikes the last couple days on Biden's last gasp of trying to do something to Russia for a war that he started eons ago, it feels like right now, and he waits till his last days in office to do something, sends oil higher, sends the economy into a little bit of a flux, certainly inflationary. If oil prices go up, you got to think that these sanctions are not good for our economy, yet we did them anyway. And they will really have no effect because oil coming out of Russia is going to go to China and other Russian allies, and they'll sneak it there. They'll get it there no matter what. So really not going to have any material impact, but it certainly did kick oil prices higher, which makes me, a little bit you know, a little bit more convinced that we may roll over a bit here because I just don't think these sanctions will work or last. And I think they're a little bit of a gap up. But we do have 112 trades on oil. So I think we're good with the setup on oil overall here. We've got a strangle, we've got 112 trades, and then we've got some naked calls on oil. And if we just kind of trade sideways from here, or if we start to come down a little bit off of this, I think those will pay off perfectly for us. Anyway, there's oil, and I don't really want to do anything with it right here. We'll just keep it's overextended. Let's just let it ease off a bit, and then we'll look to put new trades back on. In oil, oil has been of the top three trades from last year. Oil's two of the top three trades. Oil, 112 trades, number one trade for me last year as far as P&L goes. Number two trade last year was gold strangles, and the number three trade was oil strangles. So oil, gold, 112s, and strangles, the best trades for me last year. 112s overall pretty good. The long-term 112s flat on the year because of the August Volmageddon where we took a pretty good hit. And then some of the spec trade 112s on ES, obviously that hurt us a little bit more. But we did learn a bit from some of that drawdown and managed to rally back into the year pretty well. And we're doing exceptionally well this year. I will share some of that with you in just a few minutes. Let's keep going. So gold, I like the pullback on gold. This thing is setting up into a symmetrical triangle. It's going to break one way or the other, obviously. If it breaks to the upside, could be a nice significant break to the upside. I'm betting more to the upside. You've got an uptrend. You've got stochastic momentum heading higher, MACD reversing, moving higher on the weekly. So the weekly trend still good above all of our moving averages. I like the daily pullback. We've been a little bit overdone and rolling over here. So I think gold, if it consolidates or comes to the bottom of this wedge, then I think that is an opportunity for us to potentially add some more trades on gold. Right now, we're sitting in a Jade Lizard for gold. That thing is up 38% now in 12 days. And maybe we'll get into it at the end here. I don't want to keep it too long today, or maybe we'll do some more on this. But we've been really talking about the difference between a 112 trade and a Jade Lizard trade. Very similar structures. They're both bear trap trades. There are other trades out there that mirror that. We had the original bear traps using SPX, using call and put credit spreads that are unbalanced and also different widths. We also had an all put version of that. That was the original 1-1. That was the original bear trap trade. Then we had the 1-1-1 trades that we moved into, then the 1-1-2, then the long-term 1-1-2 to ease up on buying power. We campaigned those, got into a little bit of trouble in Volmageddon, but overall for a couple of years we were cranking out great returns. So gave some of it back last year, but we're still way, way, way up for the last couple of years. We're still up almost 300% in the last 4 years of trading. So all good. And in 2022, we were up 82% on the year, mostly from 1-1-2 trades, primarily because most of them hit the trap near expiration, and we were making not only we had a 100% win rate on the naked puts of the 1-1-2s in 2022 in a bear market, but we had I believe it was like a 50% hit rate on the traps, and it really juiced all of our returns. So hopefully, maybe we'll see a little bit of that this year. I would be okay if we have a sideways to slightly down year, as long as it's orderly. That's all that we ask for out there. But the Jade Lizard is a naked put with a call credit spread, which means you're limiting risk to the upside with that call credit spread. And if you put them on correctly, you have no risk to the upside on those trades, but you have a pretty nice, it's more of like a strangle. So a Jade Lizard is really more of a strangle. It's still a bear trap style trade, but you're putting it on with a call credit spread versus the 1-1-2, which has a put debit spread, same exact setup. A put debit spread and a call credit spread, same thing, except you're using puts, obviously. And our typical way we're doing it is that we've moved that put debit spread down into the money further, so that it's a little bit more advantageous to generate more profit to the upside. But the Jade Lizard is more like a strangle where you've got a nice big trap that if we do rally to the upside, we don't get hurt. So I think right now in this market, we have been adding more Jade Lizards, or we've been also been adding 111 trades that are at the money or slightly in the money, giving us a bigger trap that if we stay here or we move down slightly, these are going to pay off really, really, really well. Great little, not a hedge per se, because it's really not a hedge. It's just a great neutral to slightly bearish trade, even though a Jade Lizard and a 112 are technically bullish trades. A Jade Lizard is not super bullish because your upside, even though you have no risk to the upside, the money you make outside of that trap is a lot less than a 112 trade. So 112 trade, we use that a lot more when we're bullish here, and then a Jade Lizard, we use that a lot more when we're neutral to bearish. But we also get compensated even on the 112s if we do pull back. So either way, you have good trades, but I like gold here for that simple Jade Lizard type of setup. 112s don't seem to work well on gold. Gold futures just don't work well with a 112. The premium just doesn't really work out right, but Jade Lizards do, and I like them. I like to do them around 45 to 60 DTE. And simple for me, it's a 50% profit target for the most part, 50 to 80% profit target, depending on what the stock is doing or the underlying is doing, and then a 2x stop on the initial credit that we receive. So that's how I'm trading it. I may have my setups a little different. I don't do it the way Tasty Trade and Liz and Jenny came up with it. So I don't really do it that way. I don't have the same ratio of put to credit spread amounts. I set it up so that I can hit my accounts. I use the naked puts down at a range that I believe I would either A, be okay with assignment, or that I believe are safe enough farther on the money, but it still generates me enough cash flow to do that. You know, the Strangle is one of my favorite trades. And I think the Jade Lizard is basically doing a strangle where you're limiting the risk on one side or the other, depending on what you're seeing in the market. All right, so that being said, let's keep going here. I think a Jade Lizard here on gold is a great idea because I think we could still see some more selling, okay? But I believe gold still breaks to the upside and goes higher. So I would have no risk to the upside, okay? And if we stayed neutral, and just stayed in this range a little bit longer in this range, okay, we've been in this range now for almost 3 months, over 2 months, 2.5, 3 months in this range. So I like it here. We've got one on. It's up 38% in 12 days. I'm probably going to consider another one if we get any more pullback. Today's indecision doji candle here, moving higher on the weekly. So a little bit more bullish on the weekly, a little bit bearish or overdone a tad on the daily. But in this triangle, nice yin and yang. I think it sets up really well for a strangle. The only concern I have with the strangle is I don't love the strangle in a symmetrical triangle. All right, so hopefully that made some sense for you guys. And just giving you some insights of how I'm trading it. And you can make decisions based upon what you want to do. Here. Next thing to take a look at and is our bonds. So bonds have been in this downtrend for, geez, it seems like forever, but since about September of last year, ever since the Fed started cutting, bonds have been just heading lower and rates have been heading higher. It's the craziest thing out there, essentially putting the Fed in a pretty tight position here where the market absolutely doesn't believe the Fed has any clue what it's doing. So the bond vigilantes and are driving the yields up because they believe inflation is here or potentially returning even more with a vengeance. We're going to find out more about that tomorrow. So pushing bond yields up closer and closer to the 5% level on the 10-year. And if we look at, let's pop that up here on the 10-year, you can see we're starting to, top out a tad in over, definitely overbought territory. Doesn't mean it can't go higher, but we're sitting up here right now about 4.8% or so. We got up to, so we're close to that 5%. We could see a push even higher on that right now. So they're driving rates up, driving rates up. The US dollar has been super strong, but now it's starting to show a little bit of weakness as well. So a little bit of weakness on the US dollar, which is actually extraordinarily welcome for a number of things, including from bonds to Forex positions, which we'll talk about. All right, I'll keep going through these quickly. Uh, I like bonds here. Okay, they're still falling. They're still very oversold. They've been oversold for weeks and potentially months. If you look at the weekly chart here, bonds have been oversold and falling since November, and they really haven't recovered as far as the stochastic momentum goes. However, the RSI is finally getting to the 30 level on the weekly, which is good to see. And we've been underwater, under the 30 level on the RSI now since Monday the 6th. So really about a week now. So I like the fact that we are finally a bit oversold. We were before, started to get a little bounce and then sold off. Let's see what happens. I'm not adding any bond trades, but we do have a reverse Jade Lizard on. Okay, so a reverse Jade Lizard is selling a put credit spread to limit your risk on the downside. Okay, and then having the naked call to the upside. That trade is pretty much flat for me right now, but we've got the 105, 103 on the put side, so we're still quite a ways from that. The 126 on the call side, which we're definitely quite a ways away, and we collected $1,000 on that trade when we opened it, and it's basically flat right now, even though the markets have still been heading lower for the last 14 days that this trade has been on, and it's flat. So if we get any kind of sideways move to slightly higher, we'll start to see that really pay off. And then we've also got two strangles running right now. They're getting, they're seeing some pressure to the downside, but that's, nothing stopping us out right now. We just don't need to see this thing breaking the 110 level, heading to 109. That would not be great for us. So let's see if we find some support in here. All right, just quickly moving copper on fire, ranking, moving its way higher, way up to the top of the Bollinger Band, way up to the 200-day moving average on the daily from the lows. I think it might run out of steam a bit here, but it's overdone, so no trade for me there. I like silver on the pullback here. It's still in a downtrend, but it's a bit of a descending wedge, or descending triangle, I should say, with some support around that 29-ish mark. So we'll see if that holds, 29.2 on the bottom. We'll see if that holds. What we have done is you can see that we've moved lower, okay, here, and then I did the Fibonacci's, and as we moved higher, first off, we stopped at the 23.6, couldn't get above it, fell off a bit. Then we finally broke through it, and we stopped right here at the 38.2 fib, and that's where we fell back down. So it was a good entry point to get short here. I'm just not doing anything on silver right now. It's not a trade, not a trade for me at this point in time. All right, Nasdaq, pretty much the same as the S&P, channel lower. Everything looks weak. It doesn't look great. Don't want to enter any new trades. RTY, been in a trading range, this purple range, finally fell out of this range, came back up, touched the bottom of the range today. It doesn't look great on a longer term perspective, but you're right at the 50-day moving average here. This would not be the worst place to find a bounce. You had a hammer candle yesterday, follow through today. Looks good. If you think the dollar is topping out, if you think rates are starting to bottom out a bit, really it's all going to depend on this CPI tomorrow. If bonds and rates get moving, if bonds get going and rates start to drop, you're going to see small caps really start to take off. The way I'm playing small caps right now is primarily with TNA. So TNA is the 3X ETF for small cap. So we're in TNA, we're up 27% in our main investing account on that. So I'm playing a little bit longer term game on those, not a trading game. All right. And then 6A. We might be starting to bottom out on the Aussie dollar here. Nice move off the lows today. I'm not convinced yet. I'm not convinced that the dollar's done moving higher. So I want to see a little bit more consolidation, but not bad on the Aussie dollar. If we look at the euro, kind of the same thing. Both of those starting to put in some areas here where we might be finding a bottom. Not convinced yet. No sense jumping in, but those are certainly trade opportunities. And then as we go through, Apple doesn't look good on this pullback. However, it's at the bottom of the Bollinger Band. This might be an area. I don't trust it. Not a big fan of Apple. Not trading it. Microsoft, big pull down, breaking all of these little purple, and you can see them in here. These purple anchored VWAPs. They're all together. They uh, they held up a little as support, but really they became resistance here, and we fell down. So this is not great. I don't like Microsoft. I won't trade it. Amazon, good pullback today on Amazon. This is one of my stocks that I like, more than anything else. Take the fibs off there. I do like Amazon here. I like this downtrend channel that we're in. We're at the bottom of that. We're still holding this long-term uptrend line a bit in here. We'll see if we get any kind of a bounce off of this, but Amazon's hanging in there, and it's oversold now. Not quite on RSI yet, but it is in a stochastic momentum, and MACD's falling lower. So I would want to watch this for a little bit longer before I get long on Amazon, but I do like Amazon. Meta's hanging in there. It's in this trading range. It just continues to move in this range, a pretty big range, but it doesn't look great. It looks like everything's rolling over. I don't like the looks of Meta here. It's overvalued significantly, as is Microsoft, as is Apple. Amazon, not so much overvalued. Here we are, a lot of lines on here for Google because this is one that I'm really focused on. I like Google a lot. I believe it's undervalued. Here at 191, I believe the value is over 200 on this company. So I think you're getting a deal here. But when do I want to get in? Do we come down and do we fill this gap in purple down here? Well, that would be something I'm watching right now. We have the anchored VWAP here sitting right around 187. That could provide some support, as well as the Bollinger Band, which is right about 188. So that 188, 187, and then 185 is the 50-day moving average. And then you've also got the 50% retracement mark at 184. Right now we're holding the 38.7 retracement on the fib. We bounced off of that yesterday. We're holding on to the 21-day moving average. I do like Google. So there's a lot of things here to like about Google. It's as a company and its chart. Let's just give it a little bit more time. No sense hurrying to get into anything. And Nvidia does not look great. It's been in this pretty tight range now for several months. Bottom of the range right now. Does it break through this range, and do we start heading even lower on this thing? We're now below all of the major moving averages, the 13, the 21, the 50-day. We're at the bottom of this range. It's also a support level here. I think 131 is a good level. I do believe Nvidia is also undervalued here. I believe the value is in the upper 30s, 140, upper 130s, or lower 140s range, somewhere in there. So I think it's a deal here. I think if you bought it here, it would not be the worst thing. But right now, it does not look great. If it bounces, we'll see what happens. If it continues lower here overall, we'll wait to get in. We've already got some positions on, and we'll just wait. Again, it's a good opportunity, I think, for like a Jade Lizard, that if we're going to fall lower, great, we stay in the trap. If it does bounce here and move higher, so if we get a bounce, I think the Jade Lizard is a good opportunity. No risk to the upside, okay, and a good downside. You could also do a more at the money 112 type of a trade as well, or a 111 trade. All right, Tesla pulling back here after a big move up yesterday. This thing's hanging on to the 38 fib here off of the big run, holding that really nicely. It's above its 50-day. Tesla is so overvalued in my opinion. It's the must trade. The thing that bothers me the most is what's the over under on Musk and Trump having a fallout, and when that does happen, and I'm pretty sure it's going to happen at some point in 4 years. I'm going to give it 1 year. If they fall out here, Tesla stock will absolutely tank. Okay. So I think you got to be careful a little bit on it. I hope that doesn't happen. I love Tesla. Robotaxi, I think is fantastic. Optimus Robot, fantastic. The car, it's okay. All right. But I think those other two products send this thing to $1,000 in the next year or two. So I would want to get long. I'm just waiting for a good opportunity to get in there. I want to see this thing drop a little bit more. And then Palantir, just hammered hard all the way down to the 50% fib. So 50% of this move from back in November has already been erased. So if you keep telling me on YouTube, hey, you can retire on Palantir wheeling, and all you need is $100,000 and you can retire because you're going to make 10 grand a month, I think you're full of crap. So I just don't think that's going to work. Okay. And if you were in this and you bought at the top, well, you're 50% down. So all of your covered calls may be mitigating a little tiny bit of massive damage, but you've just seen your stock cut in half if you got in at the top. If you got in at 40, you're a genius and you're ahead of the game right now. If you got in above 60 or 70, you're not feeling too well. And if you got in at 80, you're really not feeling too well. Love the company, way overvalued. It's only worth about $40 per share at best here. So it's way overvalued. It's meme-like in here. Okay. I think we can trade it. Okay. I love the 50% pullback here. Does it stop here? I don't know that it does. If you look at the weekly chart here, you've got massive overbought starting to roll down on the RSI, massive overbought on stochastic momentum. Momentum is absolutely just coming out of the stock. I think it could fall further. It is oversold on the stochastic momentum here, and you've got a little bit of a reversal. So I think maybe we get a little bit of a bounce up to maybe this $74 mark, which is the 23.6 retracement, and then it rolls back down. I think you get better prices on it. This is not bad to get in here, 50% retracement, and put something in lower, maybe buy calls around 44 or so. If you're buying leaps, maybe not the worst way to play it. And then you can do some poor man's covered calls on this thing, even if it's up or down, doesn't matter. You can start paying that off here. A lot of ways to play it. I want to be in it. I just can't do it here. It's just too rich for me. And if I'm losing money, I'm losing money on it. I make money other places. So I can live without it. I want to be smart about Palantir. Like it though, want to get in, just don't like it here. And then AMD just sucks. This thing has been down. If you look at this weekly chart, this is horrific looking. From 200 all the way down to 116 now. It's been cut in half since the beginning of the year. Is it finding support in here, or does it go to the bottom of this channel? I kind of think it's finding some support potentially in here. I think it's not a bad deal. It's no NVIDIA. Okay. I know John F. Kennedy and you're no John F. Kennedy. Well, I know NVIDIA and you're no NVIDIA AMD. However, second or third place isn't that bad. So I think it's still okay as a company. I still think it's a decent company, and it's the best deal right now in semiconductor land. Can they turn it around and move it higher? I think a good opportunity. All right. I know that was a lot of stuff for you. So let's just jump in. Let's review the accounts and let's wrap it up for you today. So hopefully you got maybe some potential trade ideas out of that. If we're looking at the small account today, a nice little bump on the small account. Hey, we're up a little over 1% on the month as far as realized gains go. We'll be closing some poor man's covered calls tomorrow on this account. So the small account, tomorrow we'll be closing our Chipotle covered calls, which would be at almost a 98% winner. Probably should take them off by now. We are in IBIT, which is up nicely. Just new covered calls on that. Nothing to do, but that stock is up. We are also in NVIDIA, poor man's covered calls. We are going to be closing those out potentially in the next week or so. I don't know if it'll be this week, but we'll probably close those covered calls out. There's still 10 days left in them. I want to get more of the premium, the extrinsic out, but we'll be definitely adding to our realized gain. So I'm fine with where we are in this account, down fractionally on the year, a couple $100. But mainly that is all due to NVIDIA. The long calls of the poor man's covered call are down. Okay. But I'm okay because we're generating cash while we do that. So there's a small account. If we take a look at the income account or the investing account that we have, the lazy trader account, doing pretty well. We have now uh, had a pretty nice couple days here coming back. What's killing this trade is bonds. So we're down a little bit on the year, just fractionally. We're down about 2% on the year. Mainly that is almost all bonds. All of our losses in here are TLT and TMF. I'm still holding them, not getting rid of them. We'll continue to write some calls against those trades. And if we are bottoming here and those start to turn around, then this account's going to shoot up significantly. We'll be taking some covered calls and some other trades off shortly, so that should push us back into the black on the realized. But other than that, it's fine. It's an investing account. It's not meant to be actively traded. Okay, if market's down, it's down. And we've got in this account, we've got Google, Meta, Nvidia, QQQ, and SPY, and then some TLT and TMF, some bonds. So really, that's what it's for. It's just to keep generating 1.5% or so a month of gains. We'll see how that goes. All right, and then lastly, the trading account. Up for the year. So we are higher on the year. We're up not quite 1%, about 0.55. Not only on the P&L gains, but on the net lick gains as well. So we're up decently on the year. We've booked already $6,000 in gains this month. So we're off and running, and we're halfway through the month. We've already booked $6,000 worth of gains while the market's been selling off. Okay, we're actually moving higher on this account, 6,000 in realized gains. So this is not paper, it's not unrealized on the books. Okay, that's realized gains. And this account's in good shape. I like where we are on this overall. I think we're looking at bonds being, again, a little bit of a challenge on some of the strangles, but the Jade Lizards and bonds are doing well. The ES trades we have are doing well. So other than that, I think we'll take some more off. Our wins have all been this year out of the $6,000 on this account. This is where they're coming from. Here, oops. We had them and then we lost them in here. So oil 112 trade up $1,000. We've got some zero DTE. I've only played it once this week. Some wins on spec trades, and then our 112C. I don't know why these are showing in February either. Something wrong back in here. I think it might be this trade. That's why. I'm going to put a date in on this trade. This trade's not closed. It's sitting here in the closed section. So this will fix that a little bit. All right, yeah, that's all we needed to do was fix that on the closed trades. All right, and this is not a winner. I'm just booking it as a loser right now, but this trade is actually up right now 77%, but I'm just going to book it as a loser just to fill out the category so things fill, but that'll fix the pivot table. So here's where we are. We're up $6,000 on the month so far. $4,000 of that is from our 112 trades, 1,060 from oil 112s, and then 250 zero DTE and 330 from spec trades. So following the plan that we have, this is our strategy plan. SPY leaps, 40% of our account is in SPY leaps. The other 40% is in ES 112s. We're doing future strangles with about 10%, and then we've got 10% reserved for different spec trades like the 112s and others that are out there. So generating some cash. All right, there's a long enough time for you guys. If you like this video, click the like button down below. Give me the thumbs up. we can get the word out to people. Maybe get some takeaways from this that can help you in your trading as you watch me daily or every couple of days, giving you an update of exactly what we're doing, sharing everything with you, the wins and the losses up there. And it's just a journey that we go through, but hopefully we continue to evolve, improve, and increase our wealth out there. So goal on this account this year is going to be 25, 30% is our goal. So we want to take this thing up about $100,000. That'll be the challenge. That's the goal. We're up 6 grand already in realized gains. So I want to generate about $100,000 in realized by year end. That's the goal. All right. So follow the journey. If you like it, great. Join. If you don't, it's all good. There's plenty of content out there for you. If you want to check us out in the Discord, you can look down below in the description. There's a link in there for a discount. Come and join and see what we're doing there and learn something from the members, Igor and myself. Lots of live trading sessions during the day. Lots of great communication from members. Really good stuff. All right. Take care. Have a great evening. Bye-bye.